And speaking of money matters, a volatile day for the stock market, something that investors might have expected because it's October. What does that mean? Well, Craig Smith is standing by with a look at what happened today and the significance of this month. Craig?
Well, Liz, the Dow closed down 173 points today. It went below 16,000. At one point, it was down 369 points. Market experts say a drop like the one we saw today is no surprise, at least when it comes during this time of the year.
Well, historically, September and October are volatile times for the market.
Dennis Fagan of Fagan Associates, the financial planning firm in Troy. He says October is only the 6th or 7th best month of the year for stock performance. Fagan says the first 2 weeks can be especially volatile, and this year, world events happen to be factors.
You have the Ebola issue, you have ISIS, you have Russia and Ukraine, you have the Chinese economy slowing down, the European economy is stalled.
Fagan suggests the U.S. economy has its own challenges, and maybe more to come, making the current sell-off in the market something that's driven by what he calls legitimate concerns.
If you remember the straw that breaks the camel's back, that straw is not necessarily the heaviest, it's not necessarily the longest, it's just the one or the catalyst. So I would think this Ebola issue is the one that's impacting the market the most.
One of the most memorable Octobers was 1987, when the market crashed on Monday, the 19th, Black Monday as it came to be known, when the Dow Jones Industrial Average fell more than 500 points. The most disastrous October, 1929, the crash that preceded the Great Depression. Dennis Fagan thinks the decline in the price of oil, reflected in prices at gas stations, comes as a surprise to some investors who see it as a less than promising sign.
Some things that an investor might want to do first and foremost is determine their risk. You know, how much money do they have in the market as a percentage of their portfolio? How much cash do they have? If you have 10 or 12% cash, you're probably well covered.
Fagan says if one has lots of economically sensitive stocks or stocks that are multinationals, scaling back on those investments, at least a little, might be a good idea depending on each investor. Cody?